Okay, hi, this is Jesse Barkasy. It is August 10th, 2011, and sorry about the quality of this video. The port on my other video camera wore out, so I'm waiting for another charger. But I have to do a video because of the market. I felt it was important to get a video out and do some stock market commentary for some people here because the last video I thought we were going to get hit, and basically we did in the markets. Now what's happening is I'm seeing all the people on CNBC and so forth, and they're all predicting, well, the economy's fine, and Jamie Dimon came out and and in the long run this and that. Well, you know we don't know what long run means. In the next 10 years, is the market going to go down another 40% and then come up? So these people aren't giving any good ideas for people that invest. But all I want to say that for me, I see that the market right now is in a downtrend, and a very forceful one, a very violent downtrend, very volatile. It's moving 500 points in a day, 600 points and more. The thing about it is, though, that when I was first in the stock market and the Dow Industrials was around 2000, it frequently moved 50, 60, 70, 80 points in a day, and sometimes 100. So if you multiply 2,000 times 6, you get 12,000 or 11,000, where the Dow is today, about 6 times the move. So if it was a pretty heavy move when it moved 100 points back then, that would equal 600 points. But it frequently moved, in my opinion, 50, 60, 70, and 80 points. So if you multiply 80, that's 24, 24, 48, 480 points on the Dow. So I don't feel like the moves are that drastic. They're drastic, and it's more than it was before. It was very smooth before. But I feel like there's a rush out of the market by institutions right now. And no matter what they're saying, this volume is very heavy. There's a rush of institutions leaving the stock market. So I feel that within the next few days, weeks, or months, we're going to find out why. And also, you got to remember it's August, and then you got September, October. What happens in a lot of Octobers? A lousy market. So be very careful. My opinion is I'll have a certain amount short. I don't have it yet. The market just fell so fast. It just kind of got away from me. I felt it was a little extended. So I'm waiting. Maybe it'll rally for a few weeks and then roll over again. I'll look for some double tops and so forth. But right now, the market is in a downtrend, period. And they're all going to say the valuations are here. There's more cash on the books of these companies. The PEs are low. Well, maybe the PEs are low for a reason. Maybe the price to earnings ratios are telling you that there's a feeling that they're going to go lower. Because generally, the high growth stocks, the PEs will go high. They'll be 30, 40 times price to earnings ratio, and a stock can go up 100, 200, 300, 400, 500%. So the trend is down, and who knows why they have all that cash on hand, the companies. Maybe they're worried they're going to have to pay all these taxes. And the other argument is, well, the companies have never had such good balance sheets since, whatever year, 2008 or something like that. Jamie Dimon was saying that, I think, something about the balance sheets were good and everybody's going to work. Well, if the government hadn't put all the stimulus in and we weren't on crutches, the balance sheets would not have been good. The problem, I think, is we needed to let the system flush out. We needed to get valuations of certain stocks, of certain commercial real estate, maybe even residential real estate, even lower, so that the solid buyers could go in and create a floor for the market. Okay, I think that's what happened in the 80s and 90s when Home Depot and Lowe's came. Home Depot, I think the real estate values were very low, and Home Depot started to create stores and cause the retail boom for Walmart and Home Depot and so forth. So, in my opinion, that they keep propping up the market is a sign, very dangerous sign that we're going to have a very big break, and it could be right now, but you never can be sure. Right now we're in a downtrend. By next week or month, we could be right back on an uptrend. You never know because it's information coming at us day by day, week by week, and it's like a living thing. The way people buy and sell and what governments do is like a living thing. But right now it's on a downtrend, and there's one more point I wanted to make. Can't think of it right now. But basically, I imagine it like a forest where a storm comes through and knocks over the bad trees, the dead trees, and the branches. And basically, the Federal Reserve and the government trying to prop up and stimulate the dead trees, they're going to still fall. The branches are still going to fall, and I think that's what you're seeing now. And the other fact is, if you could go back to my causes of a possible depression video in the United States, is, we're still sending a lot of money out of the country and not enough coming back in. So we've got, for an example, what the United States is doing. We've got all these credit cards, and we borrow a lot of money, and then all of a sudden our pay gets lowered or we lose our job. And the answer is to get more credit cards and more credit to borrow more. So this is the thing that they're doing. They're pushing the problem down the road, expecting that the market is just going to turn because I don't know why. The reality is structural things have to be fixed. The market has to cleanse itself out. It has to fall, and that's the way for it to be a healthy recovery. And like I said, though, don't be mad if next week or next month the market is higher, because trends just change. They're an animal of their own. They're a beast of their own. This trend could last and go below the 2008 low, or it can go higher. But the point is, right now, it's a downtrend. And they're all trying to defend why it shouldn't be a downtrend, and that's kind of funny to me. Even Warren Buffett, well, S&P shouldn't have downgraded anything. We should be quadruple A. Meanwhile, the market falls 5 and 10%. So all these words, while the market goes down, while institutions are taking their money out of the market, is a serious sign to me. I've been staying out, and this is my message for you. Just be very careful. I think harder times may be coming in the United States until we get our act together, get using natural gas, solar, or coal, and stop sending so much money overseas and so much wars and spending money on so many wars. So you spend money on wars, you have violence while people are starving in Africa. What do you expect to happen to the world? This is what's happening. So that's my opinion for now, but my opinion doesn't count. The reality is we are on a downtrend right now. So no matter what they say, you can just ride along that downtrend, and if it goes against you, you just have a point where you stop out, period. And that's what I'm going to do as soon as I can get myself a position in the market here. So just a quick comment on the market for you. Thank you very much.